Welcome to another edition of Zach's Rank Buy. I am Brian Bolin. I'm the aggressive growth stock strategist here at Zach's, and I got two more stocks for your aggressive growth radar screen. And I'm hungry. I hope you are too. Let's do two food-related things. Now, you're not going to like all of my food topics here, but the first one is Dutch Bros. Dutch Bros. It is BROS is the ticker. It's a Zach's Rank number one. That's a strong buy. And as in all of my aggressive growth stocks rank by videos here, it's an A for growth. And then I like to look for a weak value score. That's an F for value. So I know right away I'm on the right path because growth investors and value investors are inherently looking for different things. All right, this is a restaurant. And I'm going to be totally honest with you. I've never seen a Dutch Bros restaurant ever in my life. $5 billion market cap, though, means there's probably a lot of them. Maybe there's one in your neck of the woods, but I'm going to tell you down here in South Florida or South Ohio, as I like to call it, we don't see too much of them. All right, and this is probably the reason. It's based in Grant Pass, Oregon, so it's probably a West Coast themed thing, but whatever. We don't care where you're located. We care if everything's going good for you. And as I look at this chart, this was a beat, but the stock just tumbled. Let's take a look at those numbers then. All right, so here's the story. Are you beating the number? You are beating it handily. 14 cents when they're looking for 7, 4 cents when they're looking for 2, 9 cents when they're looking for 2, and 19 cents when they're looking for 43. I think when you're posting gigantic numbers like this and you're just barely beating by just 46%, I'm being sarcastic. That's a good size beat. That's why that stock might have tumbled. Might have been something else. But let's see if we're just going to not know anything about the stock. Tell me what the numbers tell me. For this quarter, 60 days ago is 11 cents. Now it's 12. That's a penny. We've been break even on the all-important fourth quarter. That's odd to see for a restaurant. For the full year, 39 cents. That's holding steady. And then 48 cents down to 47 cents. So that's going to be a downward error, just a penny. Not too much to be concerned about. That's a full year out. That guidance will probably change. Are you growing? And that is the key thing for these stocks. We're looking at 27% top line growth, sales of $1.23 billion, growing again next year to 19.8%. It's a $1.47 billion. You're growing. I would love to see growth accelerate from 27% to 28%, but I know that's a big number on a restaurant, so I'm going to give them a full pass on that. They're growing. 19% is good for any retail restaurant chain sort of deal. But boy, oh boy, are you going to pay for this growth? 91 times forward earnings. That is a lot. That's a huge multiple. 7.8 times book. That's another big one. You're growing at 30% in the most recent quarter. That puts your price to earnings growth there at over 3. That's a lot. All right, price to sales is 4.5. Our operating margins, restaurants are razors than operating margins. So 1.1%. 2 quarters ago, 2.5%, you're moving in the right direction. If you can get this up to 5%, I think that stock is very respectable at the current levels, possibly even beyond. But how does the chart and earnings, what does it tell us? Okay, this Dutch Bros avoided the pandemic and then the tech wreck, whatever. It's okay. Then we're just hanging out here. We've been beating the number solidly, and these estimates are giving me a kind of feel like they want to push it higher. So does this stock get back up to 50? I think your resistance level is going to be back here where that most recent miss was. So that 47.5 range. But still, definitely a stock to keep your eye on. Dutch Bros, BROS is the ticker. All right. Are you hungry for more? Well, I bet your dog is, because FreshPet sells dog food, cat food, all sorts of things. So we're in the food space. I know it's a stretch, but so am I. I'm a big stretch. All right, Zach's Rank number one, strong buy, A growth, F value. We said it already, food industry. We got a $6 billion market cap. You're reporting before the market opens on November 4th. Anything else going on November 4th? No, that's the tip. All right, and a 12% earnings ESP. That's a little tip off for you, an indicator that the analysts believe that they're going to come in ahead of expectations. All right. So are you beating the number? You're losing 15 cents when they're expecting a loss of 20. You're making 31 when they're looking for 9. That's great. Look at this quarter. This is something. They're looking for a loss of 22 cents. You make 21 cents. The way to flip the script up. All right. And then 67% beat there, even though you lost a little bit of money in the quarter. So you're a little uppy downy here, but maybe things will get solid and get going forward, always producing gains. All right. 16 cents for the coming quarter, 41 cents. There's no movement there. And just a 2-cent move, 70 to 72 for the full year. Then next year, $1.26 to $1.33. So that's good implied earnings growth of, and I'm going to cheat there, 84%. For 2025, but no real movement in the numbers here for this quarter, next quarter, and slight movement this year. Wondering how it got to be a and a strong buy. All right, but who cares? Are you growing the top line? And you are. 26% top line growth this year, just shy of $1 billion. Next year, going to 1.2 billion, super strong, 25% growth. That is a very slight deceleration. It's from a big number. I'm going to give this company a pass too on my new thing that I'm looking for, only stocks with accelerating revenue growth. Woo, are you paying for it though? 187 times forward earnings. That's a ton for 28% top line growth most recent quarter. All right, 6.5 times book is it big? Is it small? I can't really say. I'm just too overwhelmed by that price to earnings. The earnings really got to catch up. 7.5 times sales. See, that's that big number as compared to the restaurant number there. Again, operating margin is super slim. And look at that, not even a full point. And then going up to 2 points. So if we can get this guy up to 5%, this number's got to come down. And that only comes down with good earnings growth because this stock is already up there at $140 per share, $5 billion company, $6 billion thing. All right, we're all going to die, but we're going to feed our pets. And wow, the pandemic really helped you buy pet food. Maybe everyone got a pet during the pandemic too, or whatever. But then it came down. Tech wreck, even though you're not a tech stock, you felt it possibly because you're Oregon-based. Earnings, see how these lines were trending lower. The earnings lines are trending lower, and that probably helped with things moving lower. But now things are trending higher, the way that I like to see them. And there's good space between these earnings, which implies that good earnings growth. Look at that. That's earnings growth right there. All right, so you're seeing a lot of beats there more recently in the stock reacting well. So I'm going to keep this one on my aggressive growth radar screen. It's FreshPet. The other stock was Dutch Bros, and that's BROS. All right, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.